why Chinese stocks are falling. There might be a potential delisting of some Chinese companies such as Alibaba, NIO, XPeng Inc., which I have done a video on as well. This is StockerFinance. I'm your host, David Shore. You should follow me on twitter.com/StockerFinance for more info, patreon.com/StockerFinance to support the show. So anyways, here is NIO. Just going to go over some of these charts here. We can see that it's down 17.9% the past 5 days. Alibaba down over 4% in the past 5 days. Not as much as some of the others, since it is a much larger company. It's going to deal with less volatility there. Market cap now at $716.45 billion. Historically, I've been very bullish on this company. I thought it was very undervalued. That proved to be semi-correct, as we've seen a surge in share price for this company over the past few months, especially since the pandemic low. But now some news came out that we're going to go over in an article here in a second, that they might deal with a potential delisting on the U.S. stock market exchanges. And basically what that means here, and I'm going to actually go to the next one here, XPeng, before we get into that, which is down 24.88% over the past 5 days. So this price of this stock just plummeting right now. But this is because of a potential delisting. It's a growing threat for Alibaba, JD.com, NIO, XPeng, and a bunch of Chinese companies that operate as ADRs. And ADR, what that is an American depository receipt, which allows them to trade on U.S. exchanges. But they're obviously not U.S. companies. They're based in China. Now, this is a big deal because if they are delisted from the U.S. stock market and exchanges, although there may be some ways to still purchase shares of these companies through ETFs and some other things that I'll get into at the end here, they're going to lose a ton of funding. There's going to be a massive sell-off. We've already seen that happening right now, as I just showed you, and that's just because of all the fear surrounding this. It's uncertainty, and investors do not like uncertainty. Now, this article is one that I'm going to reference here, and I'm actually going to go over it because I feel like it explained the situation very well. So, new fraud allegations against Chinese electric vehicle maker Kandi Technologies come out at a particular bad time for Wall Street. On Wednesday, the House is scheduled to vote on the Holding Foreign Companies Accountable Act, which could lead them to the eventual delisting of Alibaba stock, JD.com, NIO, and other China stocks, including XPeng, which I've done multiple videos on. That's an EV maker. If you want to check out those analysis videos, you definitely should. Now, Alibaba already fell 5% in Monday's stock market trading, and you saw the other ones that have fallen as well. Now, if we move on here, in the bill, it's already cleared the Senate, and that was a bipartisan vote, which means if you're not from the U.S., both political parties, the Democrats and Republicans, who have majority control of the Senate. Those are the two largest parties in our political system here in the United States. Well, they both agreed to vote on this, and it could kick Chinese companies off the U.S. exchanges within 3 years. So 3 years from now, they don't agree to audits, or if their audits come back, bad, that they were actually lying on a lot of their finances, they could be kicked off U.S. exchanges. Now, this is kind of good for investors because we want honest financial results from these companies. But if they're already being honest, well, this is, pretty bad for investors because it's so much uncertainty. What if this company that I've been investing in this whole time is actually lying and this audit finds out that it's not true? So that would happen unless their auditors come under supervision of the Public Company Accounting Oversight Board. Now, Beijing has made it illegal for Chinese auditors to submit such scrutiny from an overseas regulator, seeing it as impeachment of national sovereignty. With House passage of the HFCA bill looking certain, China's hardline would seem to doom the U.S. listings on China stocks, or of China stocks, with a combined value of more than $2 trillion. I mean, for Alibaba especially, it's nearly an $800 billion company, which is, a majority of that $2 trillion there. And that's a huge company to be delisted from the U.S. exchanges. That would definitely rattle the entire stock market in the U.S., and especially the stock market within China. So for investors, definitely a very worrying situation there. Now, however, Congress may not have the last word, says Derek Scissors, resident scholar at the American Enterprise Institute. Sorry, I'm stumbling on my words. He says Treasury controls implementing regulations for whatever Congress passes. So that is somewhat of a good news, and maybe why Alibaba has not completely plummeted into abysmal right now because of that news. But also, if Alibaba is audited and it turns out that they were telling the truth, well, then it should return back to its previous trading prices and continue on trading on U.S. exchanges because it's being audited legally now, and that will be okay. But the Chinese government is definitely going to argue against that, and it's a really sketchy situation we're in. Now, in 2013, the PCAOB agreed to let Chinese companies access U.S. capital markets without fully meeting required levels of disclosure and transparency. That paved the way for a big crop of Chinese IPOs like Alibaba stock, JD.com, and tons of the new ones, including, in the past few years, we have NIO, XPeng Inc., and a bunch more EV companies more recently who are providing very affordable EVs to the U.S. market using Chinese manufacturing, which is a segment that I'm just really interested in. Now, from 2013 to 2020, Chinese firms raised about $60 billion through more than 140 new offerings. Yet the PCAOB says China hasn't held up its end of the deal, leaving regulators unable to protect investors from fraudulent accounting. And a lot of these S1 forms, you're going to see warnings that talk about fraudulent accounting, that talk about how they don't actually, because of an emerging market company or a foreign company from China, they don't actually have to be audited. And that's a really sketchy situation that leads to some uncertainty for U.S. investors, because when you're investing in a company, you want to know that the financials you're reading are honest. Now, if China stocks lose their U.S. listings, American investors will still have a way to buy Chinese internet and tech stocks via mutual funds and ETFs, and that's kind of what I mentioned earlier. Yet the era of U.S. investors choosing among the best China stocks, providing easy access to the Chinese e-commerce boom and rising consumer economy, may be winding down, and that's a huge deal. If we move on here, what will Yellen do? So in August, a policy group led by Treasury Secretary Steven Mnuchin offered a more lenient approach to get around Beijing's refusal to let the PCAOB review the work of Chinese auditors. Mnuchin would permit Chinese firms to engage a U.S. accounting firm to do the job. Now, critics of Mnuchin's approach argue that U.S. accounting firms couldn't vouch for the accuracy of the secondhand data they would get to review. On the other hand, Wall Street has billions at stake in revenue tied to China stock issuance and trading in the U.S. In the coming weeks, the SEC chair, Jay Clayton, might bring Mnuchin's more flexible approach up for a commission vote, but that big question is what Janet Yellen, the incoming Treasury Secretary and President-elect, who's Joe Biden picked to be the Treasury Secretary most likely, Mnuchin would have attempted to strike a 2021 deal with China to avoid the scheduled delisting. Caesar said, I don't know how Yellen and Biden view this. So definitely a very uncertain situation for a lot of these companies. And that's partly why we've seen some of these Chinese stocks just plummet in their price in the past few days when this news was announced. Now, Friday is going to be the day, I believe that is December 4th, that they are actually doing the vote in the House. We'll find out then what happens, or possibly right after Friday. Let's continue on here. To the extent that Yellen and Biden are still weighing in on the issue, KNDI stock fraud allegations may help the case against half measures. Definitely not helping for this case. It's definitely going to encourage some of the House voters to vote for the delisting of these companies. On Monday, Hindenburg Research published a detailed report on alleged self-dealing by the EV company Candy, how this China-based NASDAQ listing company used fake sales, EV hype to nab $160 million from U.S. investors. And that's what I was talking about. There's been tons of Chinese IPOs, especially in the EV segment, which seems really exciting. You see XPeng Inc. And NIO. I'm trying to think of some other ones that I've mentioned previously in other videos. But a lot of those companies, it's really sketchy that we don't know if their financials are being 100% honest or not. Now, I believe that some of the bigger Chinese companies like Alibaba are being fairly honest, since they have so much scrutiny around them and so much just eyes upon those companies because of how just large their market cap is compared to some of these other smaller little EV companies or small tech startup Chinese companies. But exposure of fraudulent financial reports by Lupton Coffee as well, which was a huge deal, that helped push the Senate to take up the Chinese stock listing legislation, first proposed in 2019. Now the once hot Chinese stock has been actually delisted. There's a ton of stuff. If you haven't read into the Lupton Coffee scandal, you definitely should. It's a crazy scenario. What happened there, just a bunch of fraudulent financial reporting. There's executives who are fired. There's things, just so much drama going on there within Lupton Coffee. Super interesting. Now, the China stock accountability legislation also would require Chinese companies to provide assurance that they are neither owned nor controlled by a foreign government. So just super interesting combination going on here. And again, if we look at Alibaba Group, the thing is, in my opinion, there's really two options here. Either they get delisted from the U.S. exchanges, and at that point, I'm most likely not going to be investing in Chinese companies anymore, too uncertain. I don't know if I can trust the numbers, etc. Or it's going to create a really interesting opportunity because all of these companies will be extremely undervalued. And if it turns out that no, they were being honest in their auditing, or if China and the U.S. comes to a deal, or if somehow the House decides to not pass this, or the Treasury Secretary does something interesting as well, it could create a unique opportunity for these companies to be extremely undervalued, especially Alibaba right now at $700 billion. and create a unique situation for traders and investors alike. Now, could this create a new opportunity, as I was talking about? Now, in green here, if you don't know why it's multicolored, crazy clown-looking words here. The green, as I do in these summaries, is the good stuff. Orange is kind of the medium, and the red is generally the bad stuff, just to highlight everything and separate out the different words and sentences here. So if Alibaba, which is the ticker symbol BABA, is properly audited without trouble, then it won't matter. They still won't be delisted for 3 years as well. This could force Chinese companies to become undervalued if their financials are truthful. Again, some of these companies, we don't know if they're telling the truth or not. We've with Lupton Coffee, with the other scandal with that EV company we just read about. There's lots of different scandals going on or that have already happened, especially with, Lupton Coffee and these big companies that are taking money from U.S. investors, have fraudulent financial reporting. So if their financials are false, how can we value these companies? We don't know whether they're overvalued or undervalued. I mean, we have no idea what's going on. They could have absolutely zero revenue, and we could think, but they could be saying they have a ton of revenue and are a profitable company. So it's really hard to tell. That's the danger and the uncertainty within these markets right now in these Chinese companies. They will most likely pass the House. So I'm guessing this is going to pass. Pass the Senate with bipartisan support. I won't be surprised if it passes the House as well. I expect lots of new crazy options activity to occur, so watch out for that. Short interest is also rising significantly during these uncertain times, which means we could be set up for a short squeeze if in the future, if something reverses this trend, if the Treasury Secretary comes out, if there's a deal with China that's made, or if simply some of these companies agree to be audited by U.S. auditors or the Auditor Association. I forget what that association was called there that I just mentioned. If that's the case, and let's say Alibaba is telling the truth about their numbers and it continues to trade on U.S. exchanges, then perhaps all those shorts, most likely the company's stock will reverse its trend right now, and we'll go back to what it was trading at originally. But a very sketchy situation, especially for us long-term investors. It's just best for us to wait and see. Personally, not really dealing with it, not going to get into the trading game here of this super interesting situation. I'm just going to watch it, see how it plays out, and I don't know. It's just a really crazy situation going on right now, but it'll be interesting to see how this vote goes and what news comes out as well. I'll definitely be tweeting about it on my Twitter. So thanks for watching. Please subscribe. This was definitely not one of my normal videos, a bit more rambly, a bit more, breaking news-like, but I'll be back to my normal analysis video on Thursday and the following week, Tuesday and Thursday as well. Twitter.com/StockerFinance for more updates on this situation as well as other financial and stock market news. Check out these videos as well, and Patreon.com/StockerFinance to support the channel. I'll see you guys in the next one. Peace out.